Hey, hi everyone. Sorry, I'm just checking to see if everything was working. I think it should be working now. Hmm. Okay, can you guys hear me or see me in the chat box? Can you guys hear me, see me, and let me know if everything is working in the chat box? I have my screen shared. It should say IC Markets Global Webinar Live Analysis Session, 25th of February. Okay, cool. Okay, cool. Hi. Hi, everyone. Hi. Thanks. Thanks, Richard. Thanks, Crob. Thank you. Thank you. Okay, so just to be 100% clear, everyone can hear me, everyone can see the screen. It's not that important that you see me, but more importantly is that you can hear me and see the screen. Okay, cool. Okay, cool. I'm just trying to make things more comfortable. Okay, cool. Um, Yeah, so hi everyone, welcome to today's webinar brought to you by IC Markets. We're going to do a live analysis session. What that means is I am going to go on to the live charts. I'm going to show you guys how I would usually do my analysis, and hopefully you learn something from it. Hopefully you see the markets from a different perspective. You see the charts from a different perspective. Please do not take this as a signals group. You are not here to copy me blindly. You are here to see how I usually do my analysis. Okay, so before I move on, I do need to go through the disclaimer. It's a long disclaimer. I will have to give you guys a minute or two to read through it later. But basically, the disclaimer is a reminder that anything that I share with you guys in this webinar should not be construed as any form of trading advice, any form of financial advice, or any form of investment advice. Okay, it's definitely not a signal to buy or sell. I'm not here to tell you guys to get in here, get out here. When I go into the live charts later and I say, okay, I see a buy entry, I see a sell entry, it does not mean that you should be copying me. I am literally sharing how I would usually do it. Uh, Please take whatever information you gather today or whatever you see today and take it and apply to your own trading style. Okay. These webinars were created to help you guys become independent in your own trading and to help you trade without having to rely on anyone else. Therefore, you shouldn't be relying on anyone because even for me, I can still get it wrong. Okay. Okay, so another risk warning, trading Forex and CFDs, especially if you are trading on high margin, carries significant risk and may not be suitable for everyone. You may lose more than you intend to. Okay, so I'm gonna stay here for a minute or two so you guys can read through the disclaimer. All right, I think that's in more than enough time. Let me continue. So I'm going to introduce myself for those who don't already know me. My name is Cassandra. You guys can call me Cass. I am an investment analyst and a prop trader. So I'm with a research firm called Everest Fortune Group. We have been recognized as the finalists for the best forex and equity research for multiple years running. Our team, we specialize in forecasting, backtesting, researching and understanding where the markets are going, and we advise institutions. We get invited by brokers, we get invited by financial institutions to share our research, like what I'm doing for you guys today. Okay, so on top of that, I am also a prop trader. That means that I personally trade as well. I mean, if you spend that much time researching the market, I would hope you'll be able to trade, right? So um, I trade multiple companies' funds. How did I do that? I had to pass their test that required me to do 10% profit within a month. 10% profit isn't that hard for me. I use a lot of technical analysis and combination of fundamental analysis these days to help me get high probability setups, which I will show you guys later under the charts. But again, please do not copy me blindly. Okay, so what is our agenda for today? We're gonna look at key approaches on the live charts, but ultimately what's important here is to understand the cheat sheet checklist. So whenever you're doing something in life, it doesn't even have to be trading, right? It can be like something as simple as like wanting to lose weight and going to the gym. You need to have a plan, right? If you want to lose weight, you want to get in shape, you need to have a plan. So your plan can be, I will start working out twice a week, or every day for 30 minutes, I'm gonna do this, or whatever it is. Or moving forward, I'm not going to eat carbs anymore. Okay, that's just an example of um a plan. Okay, so similar with trading, you need to come up with a plan. So this is the plan that I have every time that I go onto a chart, I pull this out and then I follow this as close as possible to come up with my analysis. So does this work? Does this work or not? So far, it has been working. Okay, so it's the same like when I'm talking about losing weight and going to the gym. You go to the gym, you work out twice a week. You do this for 6 months and you don't really see a difference in your body. Your weight is still the same. You don't even feel stronger. Everything is just the same. So then you need to sit back and review what is wrong with your plan and you need to replan again. So far, this is my plan for trading and it has been working for me. If one day in the event it stops working, it stops making me money, then I need to sit back, review this cheat sheet, and I'm like, okay, maybe the channel isn't working. I'm gonna get rid of a channel. Maybe I bring something else in. Okay, maybe the death and golden cross isn't working. Maybe stochastics and RSI is not working. Maybe I should pull in something else, like maybe the Bollinger Band, for example, or moving average, maybe, but so far, so good. This cheat sheet has been working. Therefore, I'm going to continue using it. So to understand how to use this, to use to execute a plan, you need to understand what the plan is. Okay, so this cheat sheet is more specifically for trend traders. Okay, it is for trend trader. That means the market needs to be trending either in an uptrend or a downtrend. If it's an uptrend, you enter for a buy. I will enter for a buy. And if it's a downtrend, I will enter or look for a sell entry. It does not work on sideways markets because all of this, not all of it, but a lot of these indicators or whatever is in here, technical analysis tools will not work on sideways market. So you need to know, it's like you need to know if this workout plan works for this body type. Okay, so in this case, this trading plan does not work for sideways markets. It only works for trending markets. So when it comes to trending markets, I first need to identify if there is any trend lines or channels. Okay, for the trend lines, I need 3 significant touches. For the channels, I need 4, 2 at the top and 2 at the bottom. Once I'm done identifying the trend and kind of like narrowing down where the movement is going to go, I then pull out some horizontal levels. So horizontal levels can be pullback, overlap, swing high, swing lows, and more importantly, Fibonacci levels. Okay, Fibonacci levels. Okay, so once that is done, I will then see if there's any chart patterns, wedges, triangles, double top, double bottom, whatever it is. I'll see what's happening. And if there's any death or golden crosses that make sense. Why did I say that makes sense? Because there's no indicator that works 100% of the time. Sometimes the golden or the death cross doesn't really give accurate information. So I need to look at the charts to know if it's giving accurate information. So if that I cannot find a death or golden cross, I will look for a natural moving average. I'll pull up stochastics and RSI to look for bounces and reactions and any kind of divergence. Divergence meaning that if on the charts price is moving up, but on the oscillator, such as stochastics and RSI, it's moving down, it is a possibility that the oscillator is trying to tell you that there will be a trend reversal. Okay. Possibility. Okay. Not 100%, but a possibility. So once all of that is done, I will then consider to see if there are any correlations. So correlations are using another pair or something else to see if that decision that you have made or the plan to set up that you have come up with makes sense. So for example, I'm doing my analysis on EUR/USD, right? Whatever I did on EUR/USD, whatever analysis it is, I end up thinking that I want to enter for a buy. Okay, I want to enter for a buy for EUR/USD. That means that I'm basically hoping that EUR goes up in price and I'm hoping that the US dollar drops in price, right? Because it's against the EUR against the US dollar. So if I'm hoping that the US dollar or the charts is showing that the US dollar is dropping in price, that means on DXY, which is the US dollar index chart, this is the chart that charts the movement of the US dollar against a basket of currencies. Okay, DXY should also be dropping in price. And if DXY is in fact dropping in price, I will have my correlation and I will be more confident entering for a buy for EUR/USD. Okay? Understand? So far, so good. If you guys have any question, if you feel any questions at all, if you feel lost any point of time, ask me in the chat box. At any point of time, you feel lost, just ask me in the chat box. Okay, so that's one example of correlation. Another example is using currency to commodity. So oil and Canadian dollars is a very good example. Why? Because Canada is a huge producer of oil. It's, I think, one of the biggest producer in the world for oil. Therefore, when oil prices goes up or down, Canadian dollars usually follow in that same direction. Okay, if oil prices goes up, Canadian dollars will go up. If prices go down, usually Canadian dollars will follow because the currency is very tied to that commodity. Same for Australian dollar and iron ore, same for New Zealand dollar and dairy products. Okay, so the last will be correlations between currency and currency. So there are certain times where economies are very much tied to each other. And a very good example is Australia and New Zealand. So I wouldn't say they're tied 100%. They're not the same country for sure, but there is some correlation. Usually, if the Australian dollars move in one direction, New Zealand dollars will also move in that same direction. It is the same to be said with euro and the British pound. The correlation for euro and the British pound used to be stronger before Brexit, but now that there's Brexit, the correlation is weaker, but still there is correlation. So that's another way you can see if your analysis is correct by going to compare in another chart or looking for correlations in another charts. So once this is all done, I can now decide if I'm going in for a reversal or a breakout. Okay, well, actually, technically, you would have realized if it's a reversal or breakout from the beginning, but yeah, this is how I would use the cheat sheet. I'm gonna clear this so you guys can take a picture. I'm gonna stay here for like 20 seconds so that those who don't already have this cheat sheet can take a screenshot. I have been using this cheat sheet for a while now. I would say more for years actually, and so far it works most of the time. I won't say it works 100% of the time. Obviously, there's nothing in the world that works 100% of the time, but it works a lot of the times. And that's all you need. You need it to work enough times to give you good profits, right? You just need to work enough times to give you good profits. Okay, cool. So I'm assuming that's done. I'm gonna pull out TradingView. Just give me a moment. Someone is saying, I heard there's haze in Singapore. Yes. Haze here is so bad. I'm glad that it's raining every day though. I guess it's like helping to clear out the haze, but everyone around me is like coughing or like sick in one way or another. Lot of coughing going on. Right, so just gonna pull out a few charts. Okay, let's resume. Okay, so I've pulled out three charts. Um, Exhale USD, ETH USD. Whenever you guys are pulling out charts, please do choose IC markets because you guys are trading on IC markets platform. You will see different brokers there, but please use IC markets because then the charts will be as close as possible to the platform that you're using. And EURUSD. If you guys have any requests in the chat box, any requests at all, ask me right now in the chat box. Yeah, just ask me in the chat box. I'm trying to see if this worked out. Wednesday. I took you guys last Wednesday on the 18th. So I said if price breaks out, good chance of, oh, it went back in. Okay, this did not work out. Um, ETH USD. What I'm doing right now is reviewing the analysis from last week. Why is this important? It is so important to review whatever you did the last time you analyzed because it will help you see where you can do better, right? It is very important. So let me see. Okay, so I'm gonna start with gold. So I told you guys last week, which is on the 18th. I said, and I even drew an arrow here, price, possibility of price pulling back to this um red box, more specifically this green one here, and that might be the entry. Price did not pull back, instead it went up. So my idea was that it will pull back and then the entry for the buy will be either here or here. Okay, so that's the thing about trading and doing your analysis. Your job as a trader or analysis is to come up with a possible outcome, right? Come up with a possible outcome. So when I was doing this analysis last week, the possible outcome was that it will pull back here and then only from here I enter for a buy. But in this case, it didn't even pull back, it went straight up. And that's totally okay. It just means that the sellers wasn't strong enough to push price down. And that's totally okay. But the good thing here, the good takeaway is that the directional bias is still correct. So the bias was to enter for a buy, didn't reach the entry, but price still shot up, still went up. So that means the directional bias is still up, which is good. Okay, this is good. That means I can continue looking for buy entries. Okay, so let's look at ETH USD. So ETH USD, price was moving in a triangle. Before I move on, can you guys let me know in the chat box how long you guys have been trading for? I need to know how fast or how slow I should be going. I will go my speed will go following the consensus of the majority. Okay, so if there's more beginners today, then I will go slower. If there's more people who've been trading for a long time, then I will go a little bit faster. So let me know in the chat box how long you guys have been trading, and then I can know if I should like really, really dumb it down and slow it down, or I can just go at my normal speed. Please explain. I'm only 3 months in. Okay. So we've got a beginner. Coming 1 year, but still not profitable. Okay, that's very normal. You're not supposed to be profitable the first year. If you are, then kudos. That's very high discipline. Beginner. Okay, so I think majority of people here are beginners, so I am going to explain it. Okay, so last week when I did ETH USD, I did say that price was moving sideways. So when price is moving sideways, there's technically no trade because when, remember, the cheat sheet caters for trending markets, meaning that it has to be moving up or moving down. Okay, in this case, last week, ETH USD was just moving sideways, right? It's just moving in this triangle. It was just moving sideways and it's getting narrower and narrower until it finally broke. Okay, so I said because it's moving sideways, I don't want to come to a directional bias because I don't want to predict the next move. Okay, so instead, I gave a um scenario of what if something happens. Okay, so I said that if price breaks the triangle on the upside and then it breaks this swing high, this is where you can enter for a buy. Okay, only from this area when it breaks a swing high. Alternatively, if it breaks the triangle to the downside and it breaks this low here, the swing low here, then there is a possible entry for a sell. So we can see that it did break the triangle, but it's still not good enough to enter for a sell yet. Why? Because breaking out your triangle is the first sign, right? You need it to be, you need more evidence, you need more reason to enter for a sell. Just breaking the triangle alone is not good enough of a reason to enter because it could have been a fake out, right? It could have just come out and then go back in, forming a rectangle, right? Forming a rectangle. So it's like, I'm done with the triangle shape. Now I want to form a rectangle shape. Okay, so, or a channel. Okay, so it broke, it moved, and then it finally broke here. So this would have been a very good entry to sell. The problem with this is that it didn't give the trader the chance to get in. Okay, so if I zoom in, hold on. You can see how big this candle is, right? You guys can see how, let me just delete everything so it's not so messy. You can see how big this white candle is here. Here. You see how big this white candle is? It broke the sell entry, so there was no way you can get in unless you were on the smaller time frames. You were on the smaller time frames and it did the first breakout and you enter here at the first breakout. Okay, so if you were on the 4 hours, which is where we charted on, you would not have been able to enter this because it wouldn't have given you a good entry. Okay, that's first things first. Second thing is, usually I don't usually enter at the breakout itself. So if I had seen this, I saw the breakout, I'm like, okay, there was no chance of breaking out. I would usually wait for the pullback. So you guys see how price pulled back and went back to this entry, sell entry. So the best entry would have been this, right? This doji here, that would have been the best entry for this setup. That would have been a really good entry. Uh, if I had gone into this, I didn't get into this by the way, because I did this analysis and I didn't trade last week. Got in here, my stop loss would have been somewhere maybe above this last high here, somewhere around here. Or usually if I'm being very, you guys know, for those who have been following me for a while, you know I like to keep my stop loss very tight. I like to put it right around just above the doji. So I can imagine I would have gotten in. Once that doji closes, I would have put the stop loss maybe $3 above the high. So let's say the high was 1936. I would have put it, okay, yeah, this would been the exact or around this area. And I would have put my take profit. The initial take profit was this swing low here, but I would have aimed for a bit higher, a bit more conservative. Okay, so this would have been a really good setup actually. If I had caught this would have been a very good setup. It's a 1 to 2.5 setup. Not the highest ratio. Obviously, if you aim for the lowest low, you would have gotten a 1 to 4, but we don't aim for the lowest. We never aim for the lowest. There's no point being so ambitious in trading. In trading, you're just catching small moves repeatedly. Okay? You're just repeatedly catching small moves. You don't need to like catch such huge moves because number one, that's not realistic. Number two, the market's moving so much. Your job is not to catch everything. Okay, your job is to catch that small little movements, the small little movements that is enough to make you some profit. So this, I would say, was a good setup, but I did not get into this. Okay, I personally would not have gotten into this. Why? Because I don't trade sideways market. Okay, I do not trade sideways market ever. There is no exception for me. Um, sorry guys. There is no exception to that rule. I set a rule and I need to follow through with my rule. So whenever there's sideways market, even though I'm tempted to, I still try my best not to get in. So this was a very good setup, but unfortunately didn't get in. Okay, so let's look at the last one, EURUSD. Okay, so I would say EURUSD did not work out at all. Okay, of these three setups, one didn't reach entry at all, so there was no loss because there was no entry. No entry means there's no loss. ETH I would say was a good setup, and EURUSD, this was not too good of a setup. Okay, this was not too good of a setup. Okay, because a breakout, the entry was supposed to happen and went back in. Okay, that's totally fine. Let's just redo this analysis. Okay, so let's just start with what do you guys want to go with? Let's start with XAU USD. Okay, cool. So I'm just gonna like draw this trend line here. I'm just figuring out what there is. Remember the cheat sheet? I said that we need at least 3 touches. So no 3 touches here. I mean, technically, if I pull it, I might be able to come up with something. No, okay, no 3 touches here, but even though the trend line isn't lining up beautifully, we just need to remember that there's nothing about trading that's ever going to be perfect. Trading is never perfect. It is just a guide. We're just basically following a guide. So I would have loved that if this touched, this would have been perfect. But in this case, it just missed by a bit. So I'm just gonna still consider this a trend line. We're just using this as a guide, by the way. Okay. A guideline of where we think price is going to move to, where we think price is going to pull back to. Okay, so another thing I want to highlight is no channel, horizontal levels. So I am going to highlight the horizontal level that makes the most sense. Okay, so horizontal level again means pullbacks, overlap, swing high, swing lows, and Fibonacci levels. Okay, a combination of all of this plus Fibonacci levels. So I'm looking at this and this is what I'm seeing. Okay, why did I choose this particular area? Oh, do remember, guys, Zones are never just one line. It's always like a box or again a zone. Okay. So this is a zone where price tends to go to. Okay, we can see it's evident here. Price came here and reversed. Sorry, let me change. I need to change this to a different color. Okay, there you go. Yeah, so price came here and it reversed. Came here, did a little reaction, some kind of reversal happening here. And then it came here again the third time and reversed. And now we've got this fourth time here. So this red box is an area that price likes to react off. Not that price likes to react off, but like we have seen in the past 4 times since the 4th of February. So for the last 21 days, for the last 3 weeks, price has been respecting this red box in one way or another. Okay, so I'm gonna keep that red box because if price pulls back there again, I don't expect it to break. I expect it to reverse. Okay, so I would have much liked it. I would much prefer what's going on. Oh my goodness. Oh no. Go back, go back. I'm trying to use, oh my goodness. Okay, never mind. Sorry guys, let me restart. I'm trying to use the replay function. Okay, my drawings are still there. Okay, so I would have much prefer if price was here. Okay, let's just pretend these candles haven't happened yet. I would have preferred if we were still here because then I know this is an entry. This is a good entry. I would have definitely considered this as a really good entry. So then the question is, oh, why don't I just get in now? Okay, you never get in when price is already up. Okay, I'll give you another example of how to think about this. Let's say you go to the market and you buy a house. Okay, at one point that house was selling at $50,000. Now, because you are late, it is now selling at $100,000. Do you get in at $100,000? Yes, you can get in at $100,000 because technically it will still eventually go up, right? It's still going to go up to $200,000. But your aim is always to get in at the best price. The win happens when you enter at the best price. So in this case, you can get in here, but you're losing so much profit already that why do you want to chase a trade that's not going to reward you to the best of it, the best that it could have reward you? So why don't, instead of insisting on buying this house, why don't you guys understand my train of thoughts? Okay, so price already came here once. That's the thing about gold. Gold doesn't usually go back to the same price twice. Okay? Especially if it is trending. Okay, especially if it's trending. So I would say gold is moving in an uptrend. There was this drop here that was clearly just a pullback, and now the trend has continued again. It was losing momentum here. It wasn't strong enough to push price higher. It took like a good 3 weeks for price to finally break this red box. So because it took so long to break this red box really does carry some significance. Therefore, whenever the price comes to this red box, it makes me think that it will have a hard time breaking. Okay. Price already came to this red box once. Is it going to come back a second time? I don't know, and I also don't think so. I don't know for sure, but I don't think so. Okay, I don't think it's going to come back a second time because that's just how gold works. Gold doesn't usually come and retest um the opposing trend twice. It usually comes and tests once and then just continue shooting up. Okay, but we shall see. We shall see. Okay, so in the event price pulls back here, yes, this is the best entry for buy, but I don't think that's going to happen. So instead, I'm going to call for a buy for a breakout instead. Okay. If it pulls back here, great. That's the second entry. Otherwise, it will be here. Hey, I much prefer if it pulls back because wouldn't it be great if you go back to that house and now that house that you wanted to buy at 50,000 that went up to 100,000 now dropped it price back to 50,000. Wouldn't that be better? Right? That would be great, right? So I would have much preferred if it comes back a second time, but in the event it doesn't happen, then I will need to play a breakout. So the problem I'm playing on a breakout is finding the next take profit, right? So I know a price. If it breaks out here, means that there's a high chance it's gonna go higher, but higher to where? To where? Okay, so I'm just gonna randomly choose the next swing high. Okay, but otherwise, if it pulls back here, this is going to be the take profit. A very conservative one. Stop loss is gonna be right below here. And this looks like a really good setup actually. In the event it gives us a second chance to get in, right? It is I would say 1 to 2, 1 to 3 kind of setup. Okay. Very good risk to rewards, very good odds. Okay. But if it doesn't pull back and it just breaks out, then the next zone will be here. I think it's overreaching. Can aim for a bit lower. It's kind of asking for a bit much. The stop loss will just be somewhere below this and take profit. So it's gonna be another 1 to 3 trade, which is not too bad in itself as well. But obviously the better one, if it can pull back, I always love playing pullbacks. I hate playing breakouts, but I mean sometimes you just you just do what you can with whatever the charts is showing you. Okay, so that's all I have for XAU USD in terms of the first three parts. Now I'm going to see if any chart patterns. Okay, there was a chart pattern. There was a triangle, but price already broke that triangle, so it's not that relevant to us anymore. I mean, I think I can draw a channel actually. I can draw a channel. This changes things a little bit. This really does change things a little bit. Hold on, guys. Okay. I've seen this before, sorry. Scratch that. I think there's a good chance price is gonna pull back. Okay. But I'm gonna have to widen this gap. I think there's a good chance price is going to pull back. I'm trying to narrow down exactly where is it gonna pull back to. Nope. Hold on, guys. I mean, it almost seems like I'm forcing levels at this point, but we shall see. Okay. Um, Sorry, I should have seen that channel long ago. But now that I see it, it's still not too late. Okay. I take it back. I think there's a good chance price might pull back. Okay. I think there's a good chance price might pull back more specifically. to where this yellow box is. Okay. But in the event it doesn't pull back, I think it's gonna go higher. Okay, so again, good chance it's gonna pull back to here. And then from here it goes higher. If not, it's going to break up. So alternate scenario. Somewhere within this red box, but more specifically, okay, I think more specifically in this yellow zone. This would be a very good setup if it reaches to the dot. And foresee this being a very nice and clean setup. Okay, got it. Okay, I'm happy with this. Hoping it works out. Let's pull out some indicators. Okay. Not telling me anything unusual. Okay, uptrend. Oh, yeah, so following the cheat sheet, I don't see any chart patterns. I already pulled this out. The 50 is moving above the 200 means that it's a golden cross, means that it is an uptrend. No need for moving average since we have already done that. I'm going to pull out stochastics on our side to see if there's anything weird. Anything that is trying to tell me. Not the SMA, sorry, the stochastics and RSI. For those who are wondering how come I have all these indicators, it's because I selected these as my favorite indicators. So you can do that as well to help you because these are the ones that I use the most. I don't see any divergence on stochastic. So far so good. Pretty happy with that. Don't see divergence on RSI. In fact, it is nicely supporting the bias. Okay, so far so good. Is there anything else we have not used? Correlation. There's no need for correlations for gold because they don't really have any correlations to gold unless you're doing it on silver or whatever it is. Okay, so this is what I have for um gold, right? I think the green arrow is the more likely scenario, but we shall see. I'll see you guys next week and then we shall see. Okay, so let's look at Ethereum. On the really big picture, Ethereum is clearly moving in an uptrend, right? Very nice uptrend, in fact. Well, not very nice one, but it's been moving in this uptrend for years now, right? So this was March a year ago. Okay, again, even if I cannot draw a perfect channel, you guys need to know that all these drawings or whatever it is are just a guideline. Okay, they're just a guide. Ultimately, how do you measure a swing, an uptrend or a downtrend is seeing if it's higher highs, okay, which Ethereum was doing, and higher lows, okay, which Ethereum is doing, okay. Even if it breaks right now or goes somewhere nearer to this, it would not cancel out that it's moving in an uptrend. Okay, so overall picture moving in an uptrend, I would say Ethereum is bottoming out. I mean, if I'm giving my own opinion, right? Anyways, this webinar is purely based on my experience and on my own opinions, right? So I think Ethereum is probably going to it's going to bottom out soon, and then we're going to see a reversal, hopefully soon. I mean, I'm hoping as well because I also want to get in for a buy for Ethereum. Okay, so I already have a bias because I don't think Ethereum will crash, right? So I'm just gonna highlight some levels. Okay, so yes, price is pulling back right now. It's pulling back right now. It can pull back right now, but still be moving in an uptrend. See, it can be pulling back, but still be moving in an uptrend, right? So honestly, it's bottoming out soon. In my opinion, it's bottoming out soon. Okay, how soon is soon? I don't know. Let's see what we can find. Should I still enter for a sell since like it's already bottoming out soon? Will I risk it already bottoming out and I'm entering a sell when it's already reached the bottom? Um, you can, but it needs to break up. This is gonna be a huge breakout zone. Okay. It's like okay, $50, honestly, not too bad. Okay. Maybe Ethereum will try to push a bit lower. Okay, but I will not consider entering for sell unless it breaks out. Okay, this is gonna be quite a big breakout zone. It needs to break this low here, right? It needs to break the low here for me to feel confident enough to believe that it's going down. So when I say break, I mean break and a candle forms and the body closes below this zone. Okay, that is a good indication that there is a high chance price is going to continue down because the body closing below a zone means that momentum was strong enough to push price that low and close that low. Okay, if we're talking about a wick just like this, that's not a breakout. Okay, that's just testing. They're just testing the area. That is not a breakout. Okay, so it needs to break below this yellow box. Okay, so if it breaks, then I will consider aiming for the lower next zone, which is this next swing low here. Obviously, you never in trading aim for the lowest low. You never in trading aim for the highest high, the lowest low. Okay. I mean that's for me at least. I guess if there are people out there who can do that, I think that's amazing. But I personally never do that. So my style of trading is purely catching the waves. Okay. So if price is moving in a downtrend, I want to catch the move from here to here. That's all. I'm not even trying to catch the entire move because I don't need the entire move to make money. Even if I just make this small little movement here, that's already enough money to be made, right? If you just catch small little movements, that's already enough money to be made. So in a downtrend, I want to catch the small little movements. Therefore, I'm not going to try to aim for the lowest low. Instead, I'm going to aim for something a bit higher, something that has something that's tied to it psychologically. So I don't know if you guys noticed, but not odd numbers, round numbers are numbers that have psychological value. So price tends to go to like 1006, 1005, 1004, 1007, whatever it is. Okay, it likes to stop at these kind of like round and complete numbers. Okay, so if I'm gonna aim for the next low, I'm not gonna aim for the bottom of that low. I'm gonna aim for the round number, which is 1550, for example. Okay, I think that's a good target to aim for. Um, and my stop loss is gonna be here. I know if I pull out all the indicators, whatever it is, it's gonna tell me that it's a downtrend, right? It is going to tell me it's a downtrend. Yep, it is showing that it's a downtrend. Stochastics RSI, I don't think I would see any divergence. So because everything is still showing that it's a downtrend, there's no reason for me as a trader to assume that there's going to be a trend reversal unless I combine that information with fundamental analysis. Unless suddenly on the news, someone says that the US has decided to adopt Ethereum as a currency, the primary currency. Okay, if on the news it suddenly comes out like that, yes, I'm going to believe that there's going to be a trend reversal. But as of right now, because there's no clear indication, we're just using technical analysis. There's no there's no way for us to know that, okay, is this downtrend done? Is it gonna go down some more? Is it time for a reversal? Okay. Right now, there is no sign, there's nothing showing us that there is a trend reversal. Therefore, we are still going to believe that it's going to be a downtrend. Whenever there's going to be a trend reversal, it's going to be obvious. The markets will show you that it's going to be a trend reversal. You're gonna start seeing a lot of like break of structure, a lot of like there's just going to be a lot of signs. Okay, so as of right now, nothing is pointing to a trend reversal. Therefore, we shouldn't assume that it's going to be a trend reversal. So I think it's safe to say that if price breaks this area, you can still consider entering for a sell. But for me, I don't want to enter for sell because remember, on the weekly, if price is really moving on an uptrend, technically Ethereum is kind of bottoming out already. We're reaching like we're as if we're reaching the bottom of Ethereum's pullback already. Okay, so in that case, for me, instead of entering for sale, I think conservatively, but that's my own thing, right? For me alone, even though I've already done this analysis. Sorry, what's happening? Okay. Ultimately, for me, I would still want to wait for price to move down and I will look for a buy entry instead. Okay, I'm going to look for a buy entry instead of a sell entry for Ethereum. Okay, because that I will feel safer that way. Okay, so next will be URUSD, and then we're gonna call it a day. Okay, let's see where this guy is moving. Again, URUSD is also kind of like reaching its top for if we are respecting this trend line, it's kind of already reaching its top. That's why you can see like there's a lot of rejection happening because people are like the traders are confused because even the traders don't know, does it want to go higher? Does it want to break this trend line or does it want to respect the trend line? So we have reached the trend line. That means it is time. We have reached a decision making time. So now the markets need to decide if it wants to break this trend line or it wants to reverse. I think it's hard for price to break the trend line. Okay, so I'm gonna assume because this is a weekly trend line we are talking about. For price to break a weekly trend line, especially when price has been moving on a downtrend for let me see, 2008. Price has been moving on a downtrend since 2008. We're talking about an 18 years downtrend. Price has been moving on a downtrend for EUR/USD for 18 years. Is it suddenly going to break now and want to suddenly form an uptrend? It can, because technically we follow this trend line, not this trend line, this trend line. Okay, right? It would still be a downtrend, right? It would still be a downtrend. It's just that it won't respect the downtrend here. Okay, so um very risky game to play now. Okay, I think very risky. What we're gonna see in the next few days, probably markets just going like sideways or just kind of confused for a bit because it's probably wondering, okay, are we still going down or up? Okay, so I'm just going to give my analysis, but it's gonna be a low probability setup. Okay, it's going to be a low probability setup because it's very hard to come up with a high probability setup, especially when price has reached a key level. So we've got a possible sell here. I'm gonna have to call a breakout. That's the only way I can get a confirmation. And then play it to the next zone. That's it. That's the only thing I would dare call at this point of time. Um, Indicator's not even helping out. So the 50 and the 200 moving average, you can see that it keeps crossing each other. It crosses, then it crosses again, now it crosses again. It means that it's not giving accurate information at this point of time. You know when it's giving real information, when it's a nice, like the trend is nice and smooth and following the trend line. Okay, so I'm just gonna roughly come up with an analysis, but I don't think it's a high probability setup. Okay, so in the event price breaks out here, there is a good chance that it will reach, there's a chance, okay, I won't say good chance. There's a chance that it will reach the next swing low, which is the next swing zone. Why am I identifying zone by zone by zone? Why is my take profit always the next zone? You need to remember, price is like a magnet, okay? It's like it's something that, it's a metal object, okay? And all these zones, all these swing lows, all these swing lows, all these swing highs, overlaps, whatever it is, they're like magnets constantly pulling price towards them. Okay, that's why my take profit is always like this. It's always the next zone. Okay, so that's all I have for you guys today. I hope you guys learned something from me. I will see you guys in a week's take note, starting next week, I'm gonna start taking you guys on Tuesdays instead. So next week onwards, it's gonna be the 3rd of March. The 3rd of March, the same time as today, 3:30 p.m. Singapore time, except on Tuesday. Okay, so I used to do 3:30 Singapore time for you guys, but on Wednesday. But moving forward, we're gonna do 3:30 Singapore time, but on Tuesday. Okay? So ta-da! Bye guys, take care. I hope happy tradings and you guys make lots of money. Okay, bye.